Welcome to the weekly pivot for September 1st, 2025. All right, so as usual, we'll do last week's review. We'll do a report card of what we got right, what we got wrong. We'll talk about upcoming events, including the September rate cut decision that's coming up on September 17th, middle of the month. We can look at the current rate cut probabilities, which are pretty high for a September cut. And then we can talk about SPX seasonality. And then we can talk about daily and weekly charts on SPX. All right, so let's review last week's work. Last week we were looking for some consolidation, and then we were looking for a hold of 6440 for a push higher into new all-time highs and into that 6500, 6550 territory. And we got it, which was great. What we didn't get was the swing Golden Gate completion, which is that push up to 6560 by the end of August. So typically that's like a historically 64% chance that we get that. And this kind of fell on the 36% chance side of things. So that's okay. We still have the position, the quarterly Golden Gate in play up to 65. I think it's 6554, but we'll call it 6550 by the end of the quarter. So that is still in play. Again, 64% chance of completion. So that's what we're looking at as we sort of close out this quarter. Upcoming events, September, the big event is really middle of the month. We've got FOMC interest rate decision that comes in the middle of the month. But for this week, we do have some volatility events that are, like the normal stuff. We've got ISM manufacturing data. We've got JOLTS jobs opening on Wednesday, and the Fed Beige Book. Non-farms coming up this week as well, with non-farm employment change and non-farm productivity on Thursday. And then the most important probably is non-farm payroll on Friday. That's going to be the big event probably for the week, which could mean that we get maybe more of a range-based week. And then in the next 2 weeks, we've got PPI and CPI, so the normal data that's inflation data. And then, FOMC interest rate decision on September 17th, which is middle of the week in a couple weeks. Speaking of which, here is the current target rate probability for September. So we've got about 90% probability that we're going to get a 25 basis point cut. I think that makes sense. I think a lot of people are probably looking for that. I think the market's pricing that in. I still am of the thinking that we will probably get just the one and maybe two by the end of the year. So I don't think we'll get one in October. And I think it'll be possible we get one in December, but maybe that gets pushed to Q1. So 1 to 2 by end of year, likely September. And if that happens, maybe the Fed will wait over the next couple months before they do the next one. So that's kind of what I'm looking at into the end of the year as far as rate cuts go. And we'll monitor it as it goes along. Things can change. The environment can change, and we'll see how things go. So let's talk about seasonality. We talked about this last week. 75% of the time when we've had a positive June, July, and August, we've also had a positive September. And there's only been 2 cases in the last 10 years or so where we've had red Septembers. Those were 2020 and 2021. Now, typically Septembers have kind of mixed bag, right? 53% have been green, 47% have been red. So we don't know what's going to happen, right? Now, that being said, we have this mixed bag of half and half sort of Septembers, and then we also have a mixed bag of Octobers, right? We've had these, red green Octobers where we've had big green, we've had big red. It's kind of all over the place. If you guys remember this year, that was a crazy year. 2008 global financial crisis, that was nuts. Now, I'm not expecting anything quite that range, but what the one thing I can conclude for most part, with the exception of kind of these, black swan years, the 2008s of the world, typically when you do get these dips, right, in September and October, if you get a bigger dip between the two of them, then into November you get a big push up. You can kind of see that here with all of the kind of November seasonality looking pretty positive. And November, December, usually into the end of the year, it kind of tends to be a nice push up. All right, so let's get into the chart. So before we start, I just want to point out these purple candles. This is an experimental feature. All it is mapping the PO compression to the bias candles on the pivot ribbon. So it's not something that's currently available. It's something that I've been experimenting with for about a year. Kind of dropped it for a little while, and then I've just come back to it to take a look at it again. And so nothing to be alarmed about. It's just something that I'm playing around with. So otherwise, as usual, kind of just the same thing going on here. So on the left-hand side, I've got daily chart with our position ATR levels, so quarterly ATR levels. And on the right-hand side, I have our weekly chart with long-term ATR levels, so our yearly ATR levels. And I want to talk about this daily IHS that we've been talking about since April. So the reason why I want to talk about it is people have been asking me about the measured move for this, how I got to 6,500, how I got to a potential upper range of 6,800. And so I want to talk to you a little bit about that. So let's take a look at this. So I'm using a neckline for the conservative side of things of about 5,700, which gives us a 900 point measured move. And we're kind of in the end zone here. That gives us, 5,700 plus 900 is 6,600, right? So that kind of gives us the low end. And I use 6,500 because it's a key psychological level. But essentially, we're in that last 100, for this conservative end of the daily IHS. Now, why do I say that? Well, if you want to use, let's say 5,800 as your measured move, which would be a perfectly fine neckline, this resistance here, this support here, that's perfectly fine. And if you're to use 5,800 as your neckline, that would give you a 1,000 point measured move, and 1,000 plus 5,800 is 6,800. So if you're wondering where I got 6,500 to 6,800 from, that is where I got it from. So just wanted to get that out of the way and just point out that we are in the end zone for this daily IHS, and that there's going to be, not a huge amount of upside here for this particular setup, this daily setup, but we're still working it out. So that's kind of where we're at from the daily IHS perspective. Now, we talked about this last week, trading the trend. We've had these dip buys to the 21, which have been buyable dips, or dip buys to the ribbon that have been buyable dips. We got another one 2 weeks ago with the move higher. Last week we were looking for a breakout from all-time highs up to 6,500, 6,550, and we got it. And that's great. And then we got a little bit of a sell-off, really nice -1 ATR day on Friday, which we day traded, which gave us a nice mean reversion back to the daily 13. So where do we go from here? Well, September is a little bit choppy, and we've got a lot of things going on. So I'm going to be real honest with you. I have no idea. My expectation is that we get a pullback at minimum to 6,400, right? Back to this key pivot that we have on the weekly chart of 6,400. And if we were to lose that 6,400 key pivot, I would love for us to go and test the weekly 8 to 13 zone, which takes us down to about 63.75 to about 62.75. That'd be kind of what I'd be looking for, a pullback to, where we've had some support in kind of that 62.75 to 6,300 level. If we were to get a deeper pullback, I'd be looking for a pullback into the weekly 13 to 21, which takes us from 60, down to around 6,200, 6,250, all the way down to the prior all-time high. I think that that's asking for a lot, but if we get that, that would be your buy the dip moment for the end of the year, as long as that holds. So that's kind of what I'm looking at, bigger picture, right? It's like, I would love, in an optimal world, we talked about that last time, is kind of get into this 6,500, 6,600 zone, pull back, and then come back up. That's kind of what I would be looking for into the end of the year. That is a pretty ideal case, and it's not likely that we're going to get something exactly like that. So if we get it, great. So this week I'm kind of looking for a bit more sideways price action, a little bit more range. I think we're probably going to be range bound. My guess is that we're probably going to stay between 6,500 and 6,400. Again, we just talked about if we break 6,400, we have some nice targets to the downside to look for. But my anticipation is that we're likely going to stay within a range of about 6,400 to 6,500. Some nice movement, maybe intraday, but I think that it's likely that we're going to get kind of more of this, kind of more of that, and maybe sideways down as opposed to sideways up in these cases, based on seasonality. But that's my expectation kind of going into this week, is that it's going to be a sideways week between 6,400 and 6,500. And that's your weekly pivot for September 1st, 2025. See you in the next one.